Get ready for this week's AUDUSD institutional market breakdown. Please watch the full video. This is an educational video, not investment advice. Analyzing the H1 timeframe, the overall market structure exhibits a definitive bearish displacement. Following a stark rejection from higher timeframe supply, the asset engineered multiple bearish break of structure formations, signaling dominant institutional selling pressure. Price action has descended into a crucial high-volume demand array, creating a pivotal structural inflection point. Our immediate focus centers on this entry zone between 0.7030 and 0.7050. We are currently waiting for mitigation here. Once price action confirms order flow transition, we can expect the move to start, presenting two distinct order flow pathways. For the bullish continuation pathway, the 0.7030 to 0.7050 demand array must hold firmly. Our invalidation level is strictly set at 0.7010. If price breaks this, our bias changes. Upon bullish structural confirmation, the market is projected to target upward buy-side liquidity pools. Scenario 1 aims for T1 at 0.7100. Scenario 2 targets T2 at 0.7140, a major internal liquidity pool. Scenario 3 seeks T3 at 0.7185 to clear premium structural resistance. Conversely, if internal demand fails to sustain institutional order flow, a bearish breakdown pathway activates. A sustained breach beneath the current demand zone validates short positions below 0.7025. For this bearish trajectory, our invalidation level is strictly set at 0.7065. If price breaks this, our bias changes. The primary objectives are to clear sell-side liquidity targets lower. Scenario 1 shifts focus toward T1 at 0.7000, representing a major psychological liquidity level. Scenario 2 projects further contraction toward T2 at 0.6960. Finally, Scenario 3 extends the structural expansion down toward T3 at 0.6900. Monitor order flow shifts at these key structural boundaries to manage risk effectively. Follow for more. The next analysis is coming very soon.